Happy 2027.
Ooh, no. I do have a question for you, Anna.
Yes.
What does a baby computer call his father?
I don't know.
Data.
I'm doing palm to face if you can't see.
So today we're going to talk a little bit about cash flow, right? So we're building out this financial plan and or working through financial planning, kind of a beginning to end each week for us for the next several weeks. Last week we kind of laid out the 6 areas. You graded yourself. We're going to talk about cash flow today, and we've got a 5-column cash flow plan. Basically 5 columns. By the end of today, you can take out a piece of paper. You can just draw 5 columns in there. By the end of today, you're going to know what goes in each one of those. Super easy to keep track of. You don't need to have 53,000 apps and categories and transactions, because why not? I mean, there's a bunch of tools, right, to help us keep track of this. Why do we want to put it on a piece of paper and not download it?
Yeah, those tools are awesome. And this is not to tell people to move away from those budgeting apps or your individual spreadsheet, but sometimes they can be a little overwhelming. And to understand your top line expense number doesn't require you to go in every single week and categorize your expenses and have this meeting and blah, blah, blah. We can figure it out in probably 10 minutes.
Who cares about what our expenses are? Where are we going to use that information?
There's so many places that we're going to use that information.
From a planning standpoint, I guess I'm saying.
It's really important for our next episode where we talk a little bit more about emergency fund. We have to
emergencies.
Another fun topic. We cannot figure out the emergency fund without figuring out this number first. Okay. So everything, a lot of things within the financial plan is going to spring off of this number.
This is a critical component to the overall overall plan. Okay, so we talked about 5 columns. What are they? How do I find the information? Let's just go piece by piece. Column number 1 is
income.
What? Income. Yeah. Where do you get your money from? So if you're a regular W-2 employee, this is what number?
So I would use your annualized salary number.
Okay. Including bonuses?
Including bonuses.
Okay.
Including, like, if you're getting RSU income, any sort of equity income, all of that included on the income.
And I can get that from my pay stub, because tax return is going to be somewhat adjusted, based on where my savings are. And that's another column. But pay stub is going to have kind of that gross top line number. And then, okay, so I know how much money I make. Now, the other 4 columns are where I'm consuming this money, right? So where's the first place that I can consume money?
First place you can consume is taxes.
Okay. Uncle Sam gets their cut first. So basically I could probably take that off of my pay stub too, right?
Now you could. That's typically where you're going to see all your taxes withheld. But if you're under withholding, if you're over withholding, that might be off by a little bit. So we want to check out our most recent tax return and look at the number of the total taxes that you owed for that year, including state, if you have state taxes, including local taxes, if you have local taxes, and adding up that number so that you know exactly what you paid in taxes.
The line item on your tax form that says this is your total tax, not how much I get a refund, not how much I had withheld, because to your point, those numbers could be off by a little bit. If I owe 10, but I withheld 12, I'm getting a $2,000 refund, which is a de facto $2,000 savings account. It's, arguable as to whether or not that's a good idea or bad idea, but you're doing yourself a disservice if you think your tax bill's 12 when it's really 10, or if you think it's 10 and it's really 12. So
exactly.
Get it from the source. So I need my pay stub for my income. I need my tax form, which, by the way, probably just recently figuring out. So so you got that kind of handy. All right, what's the third column?
Now we're going to look at savings.
Okay.
So we're going to look at if you're saving into a 401k, if you're saving into an IRA, a Roth IRA, if you're saving to cash, if you're saving to a brokerage account, really any sort of savings where HSA, yes, 529, all of that.
Trump account.
There's unlimited options.
We
Let's
could be
keep
here all
going,
day.
Josh.
Don't name them all. Yes, there's.
I was just trying to
place.
give the listeners some ideas, but
Yeah.
I do love all the specifics.
So any place that you're actively saving money intentionally, like if you're setting up a transfer to your bank account for savings, if you're putting a percentage in your 401k, pre-tax, after tax, if you're putting money in your stock purchase plan, anything that's an intentional savings, and you can itemize those and total that number up and say my total savings is this, right?
Yeah. Even unintentional savings where you've realized over the last year, you've just had cash pile up in your checking account, which is a whole nother situation we'll talk about later. But if you see that your checking account went from 20,000 to 40,000 in the last year, that's cash savings that
Yeah.
you've done. Even though it's not being transferred automatically every month, it still is not being spent.
A little reconciliation there. All right. So savings, and then we got 2 to go. What are the last 2?
Then we have debt payments. So
Pretty
mortgage,
easy stuff here, right? Stuff you
Yeah.
owe money to.
yeah, it's typically going to be a set amount. So debt payments, student loan payments, auto loan, personal loan, all of that would be categorized into the debt payments.
And why do you want to peel that column out and not include it as part of your expenses?
So that would be helpful for when you're doing more long-term financial planning, trying to understand what are your actual living expenses. Eventually you're not going to pay your mortgage. I know that might sound very
Knock on
far
wood.
off for some people.
in the short 27 years from now, you're right. I will have had my house paid off.
But a little shorter term, you're probably not going to pay your auto loan for
Yeah.
many more years. So that's going to fall off eventually. So those are not your regular living expenses. They are payments that fall off. You could even, if you want to go a step further, you can categorize a couple of other things in this. One could be daycare. You might have daycare expenses that are a lot, and they're probably going to fall off in a couple of years. There might be a couple others that also go into that category that you're not going to continue paying for the rest of your life.
Okay. So then the last column is the living expense column, and a lot of ways to calculate this. How do we calculate your living expenses after we know these other 4 buckets?
This is the easiest one to calculate.
It's so hard. What are you talking about? I got to get my credit card statements out. I got to get my bank account statement out.
Nope.
I got to
Put
figure out
them
how much I put in
away.
the vending machine every week. Now you don't even put money in a vending machine. You just tap to pay, which is
Dangerous.
dangerous. That's my kids.
So what you're going to do is you're going to take the income, you're going to subtract out your taxes, subtract out your savings, subtract out your debt payments, and what you're left is what you're spending.
Everything else.
Everything else.
So super easy, but is there a way to make sure that I'm not spending too much money, or like what's the little catch-all at the back end? We have one little litmus test at the end of every year that you can just double check.
Yeah, I mean, if you are seeing that either your cash reserves of your checking account, emergency fund, any of those, or your credit card balance, let's say the cash is going down, credit card balance is going up, then we know that you're spending more than that actual number.
Something's happening in that
Yeah.
expense bucket to account for that. And it could be those one-off expenses like you mentioned. Could be something intentional, like you chose to spend an extra $20,000 on the backyard remodel. That's what drove the cash down and the spending up. But it just gives you a little bit of pause. So 5 columns: income, taxes, savings, debt payment. Take all those things subtracted from your income, and that leaves your everything else bucket. And the everything else bucket is just kind of back tested by what's going on with consumer debt and your checking account. The everything else bucket is the key to everything from here on out. This is the secret number. So homework for this week, I already told you 5 columns. Sit down. This will take you no more than 3 minutes to do. If you just grab the information, pay stub, tax return, loan payment information, which you probably know off the back of your hand, and just figure this stuff out. And then that's your monthly or annual cash flow number. We use annual because sometimes cash flow is a little lumpy. That's your spend number. That's your lifestyle expense number that we use.
Easy as that.
Easy as that. All right. Next week, what are we doing next week? Do we know yet?
Jumping into the emergency fund.
Oh, emergency fund. Got it. All right. That sounds fun. See you next week. 8 squared.
Bye.